Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys,
Hey guys, how are you all doing? Happy Friday. I know I'm not Nick, sorry, but please don't be disappointed. Apparently Nick's away today, so I'm filling in the gap. How's your week's been? Hope everyone's at least break even. Hopefully you've not lost anything. Profit would be ideal. Okay, so let's have a look, see what's going on in the markets today. Let me just pull up the trusty edge finder. There we go. So NASDAQ and the FTSE remained the most bullish assets. So let's have a look into the NAS. Let's see if we could potentially have a trade. I know we looked at NASDAQ yesterday and we didn't see that much. Yeah, there's still not really much of an interest here. The problem is with the NASDAQ, or actually the S&P as well, they're at this pretty major level that I wouldn't really want to buy or sell into. So I've obviously got previous structure over here with the support, failed breakout here, previous resistance there, and it looks like we're having another rejection now. So I don't want to buy into it because the trend is also to the downside. But of course, Edge Finder is bullish, so it puts us in a bit of a predicament. So the only thing I would really see here would be a 50% pullback. So if we could see this 50%, if we could see the rejection here, see the market pull back by anywhere between 50% and 618, that would also then fill this gap on the left, and then we could likely see price continue to trend higher. That would be the game plan, but in the markets at the moment, who knows what's going on? Trump can say something and, markets are crashing or they're pumping. So yeah, tricky times to be in the markets right now. Nick got a haircut. Yeah. Dragon, hello. Tiger Berry, Royal Trades, good to see you guys. Down 2% this week. Marvin, 2%'s fine. Just don't revenge trade. You'll be good. Down 0.3% for the year. I'd say Dragon, that's quite impressive. Remember, the benchmark is the S&P. As long as you aren't negative by, was it like 10, 15%, you're doing quite well. Chilling in New Zealand CAD trade at the moment, kind of a rising wedge. So let's have a look. New Zealand CAD. Yeah, I know it was bullish on the edge finder. It seems to have fallen off, but it was one of the most bullish readings previously. I suppose you got the trend here. You've got, I'd say this is, yeah, in my view, this is more of a channel. I'm not sure it's a wedge, but maybe I'm looking at it differently to you. But yeah, I think, to be honest, the trend's bullish here. We've got a very clear moving average cross indicating the trend change. We've got a bullish channel, or I would call it a bullish channel. Yeah, I actually don't mind it. I don't really have a fundamental view on New Zealand CAD, but the technicals look pretty safe. Wilhelm, good to see you. Immortal Trader, hello. Should I sell or buy dollar yen? I don't know. What does your plan tell you to do? Surely you've got some research and an approach you follow. Got stopped out of a gold trade this morning. Was 0.75 of my margin. I'll wait for a better entry. Yeah, just take care. So the markets at the moment are actually quite risk on. So we're seeing gold come to the downside. We're seeing silver down as well. And it seems like, yeah, the markets are taking a little bit of a break from their pumping of gold and downside on equities. So yeah, just be cautious. Oh, okay. So you were going from double, triple tops and higher lows. Okay, makes sense. I want to buy, but I wanted to see what you were going to say. Okay. So you want to go long. I would say yeah, I would say buy now, not actually buy now. I just mean it would be more of a long position at this time, in my view. As I said, we've got a bit of a risk change at the moment in the market. So we're seeing the yen down, we're seeing the Swiss down, the euro's correcting, the dollar is heading back to the upside slightly, along with this really strong monthly level that we've got here. So I wouldn't really want to be selling the dollar right now. I would be quite happy to go for a short-term long, obviously selling off the yen temporarily, buying into the dollar, and seeing if we can get some sort of correction of this move here. But for me, this is against the trend, so I can't justify a long position. But I think longs are probably a better idea than shorts right now, anyway. I'm actually not sure how long I'm on for today. Let me just check. So it's me. Then we've got Kenzo coming to take over the show, it seems. So that's cool. 9 minutes till Michigan University sentiment. Indeed. That's why fundamentals are a great strategy. Is king, because I believe you don't do funky, weird trades. That's true. It's quite simple to trade economics, really, or fundamentals. Normally, it all leads into the same idea. DAX. It's got a slightly bullish reading here, so we do have a score of 5 on the DAX. But do I see anything on the charts? Not really. Similar situation as, I think it was NASDAQ we discussed previously, but I would need to see this gap get filled. I don't like to buy if there's an unfilled gap below. Just doesn't make much sense to me. So I would be quite happy really to just wait. Actually, let me get rid of that. So that would come and retest this previous high, fill the gap. Maybe we would get the moving average cross here as well, just to indicate the trend change. So something like this would be actually quite good, but that's if we can get that pullback. We'll see. We place you in Kenzo's slot. He's traveling today, so I'll quit. Oh, okay. I get it. I see. Thank you. Going to hold dollar yen till it's all-time high. I'm not sure we're going to get back to all-time highs on dollar yen. When I was saying long dollar, it was more just a short-term idea. I am fully expecting the dollar to come down towards 90 over time. I'm not anytime soon. I'm not saying that's next week, but later into the year, 90 to 80 is where I'm kind of looking to get to. I'm also still very bullish on the yen over the long term. So I think dollar yen is a pretty strong short position. But at the moment, for a short-term trade, I think long makes sense. But yeah, I will be looking anywhere below 150. I'll still be looking to go short. If it breaks above 150, I might scrap the idea temporarily. I'm gold sell buy and I'm gold sell buy and S&P sells. So you're selling gold going into a buy? Is that what you're trying to say? I'm confused. Been day trading this market, no overnights. That's pretty good policy. I'd say ball out actually. Consumer sentiment is coming up. I hope it doesn't ruin my positions. Yeah, we'll see. Gold buy. Okay, so you're in a gold buy. Yeah, I don't mind this actually, to be honest. If it wasn't Friday, I would consider taking a long position here. It is at the level I've spoken about. We could have a stop just below this 50%. Probably have much a larger take profit, to be honest, more towards sort of 4,000. But I think this is quite strong. I don't really like to open new trades on a Friday, so I'm not going to take it. But I might take this on Monday if we can hold this level. If it goes back to all-time highs, you owe me a coffee. Okay, and if it doesn't go back to all-time highs, you owe me a coffee and subscribe to my YouTube channel. What do you think about pound Australian? I'm not sure. I don't have anything on the top of my head, but let's see. I mean, what can you do in a market like this? This would be a case of just range trading this, really. Buy the support, sell the resistance. There is nothing else you can do there until we have a clear break of some direction, whether it be a break to the upside, retest here and to go long, or the retest here and then go short. But this is completely untradeable for me right now. Opinion on dead cat bounce. I don't really have an opinion on dead cat bounce. I'm not 100% sure what it actually means. Is it where the market bounces or fake bounces or something? I don't know. I don't put too much weight on technicals. Have my hand on the exit all contract button. Don't want my Friday ruined. Yeah, that's a good point. Definitely the best strategy to have for a Friday. UK 100. I have ES break the lows. This fake out rally. Okay. Yeah, I don't really have an opinion on that because it's not something I really trade. So if we have, let's say we had this, I would assume this is the sort of situation you're talking about. I would enter on the retest, but only after a certain amount of confirmation. So I'd need to see the RSI do something. I need to see the moving averages in a certain direction. I would need to see a bullish engulfing candlestick just to confirm momentum. If all that doesn't work, then fine. But yeah, I'm not too interested in, trying to always identify a fake out or a dead cat bounce or whatever you want to call it. So grown ass kid wants footsie. Also, I'm not sure if you guys can hear my cat, but he's sat here screaming. Okay. See, I was looking to go long, but I'm not really that interested in taking the trade anymore. So we've got a very bullish reading on the FTSE. COT's flat, retail position is bearish, so that's quite nice. So sentiment is in our favor in terms of retail. So yeah, it seems quite simple, actually. Where are we at here? So I'd be looking for this gap to get filled on the FTSE. In the meantime, to actually get into the trade, I'd be looking for a pullback into this 200 moving average. And this would be, obviously, it's only on the H1. So it'd be a very sort of, I guess, intraday position. But again, just focusing on this gap getting filled. But yeah, I'd keep it quite simple, to be honest. The FTSE is not an easy market to trade because it's very choppy. It's quite rare for the FTSE to have a very clean trend. So it's very easy to get chopped up in the FTSE. Do you talk about gold? I've not looked at gold yet, but I will move on to gold soon. Did we hear a cat meow? You might have done. I'm not sure. I don't know how sensitive my microphone is. Thoughts on euro pound? Yeah, it seems to be staying within this range. So the range here between 0.86 and 0.85, this is a range that ING, they provided this range and said that they expect euro pound to just continue ranging in here for the foreseeable future. I have a slightly different outlook. I think shorts are definitely a solid idea, but it's more a timing problem now because we are expecting the UK to have higher inflation at the end of Q2 into the rest of the year, which obviously hold off rate cuts, which will benefit the pound. The euro strength might be coming to an end. Obviously, we saw a large amount of euro strength due to the stimulus, so that was helpful temporarily. But then recently the euro has pretty much just been held up by capital flows out of the dollar into the euro, which is the next most liquid asset, really. So if we can start seeing that get priced out, and we can see dollar bulls come back, and we can see inflation in the UK start to rise, I think euro pound is a great position to continue the mean reversion strategy. Let me put us back to the H4. So you can see the behavior of the market is very repeatable. So it just has spikes here, spike here. Every time it spikes, well, maybe not every time, but the majority of the times it spikes, we very often have the bounce back to the downside and then the continuation of that downside trend. So yeah, I think if we could see those catalysts start to line up, I think, yeah, euro pound is definitely a solid idea to have in the watch list. Roshen, I've not moved yet. I appreciate the thoughts, but yeah, I'm still in the UK, unfortunately. I'm trapped here until July. Consumer sentiment came out better than expected. Okay, that's good stuff. We've done NASDAQ, Sean. I might go back to it shortly, though. Let me just double check. Okay, sweet. So I've got just over 10 minutes left. So Chris Pulver's coming to take over after me. Sorry, it wasn't Kenzo. It's not good stuff. Why is that ball out? Oh, okay. Yeah, your S&P position. Fair enough. Yeah, fun. It's a good way to end the Friday. Okay, so Swiss yen. Oh, actually might be giving me an opportunity to scale into this position. At some point, there'll be one for next week. We've got euro dollar that's not really done anything. Copper avoided stop loss barely, so we might be able to get some pullback here on copper. Dollar Swiss shorts are still an idea I've got, but as I was saying earlier, I am temporarily bullish on the dollar. So if we're seeing risk come back on, we're going to see outflows of Swiss, likely inflows back into the dollar as well. So short dollar Swiss right now doesn't make any sense to me. Silver, I would love to go long silver, but as we discussed yesterday, the put to call ratio is pretty dismal on silver, or it was. Let me just make sure it still is. Oh, it's not actually. It seems to have pulled back, which is nice. So it was at extreme greed, which was a bit of a red flag. It's like retail being majority long silver. So we can see maybe a slightly deeper pullback, but this is also acceptable. So we've got the break. This could now be classed as a retest. We do have this moving average cross indicating the trend change. So it might be worth taking a low risk position maybe on Monday and just see if we can get something to continue higher from here. If not, then this idea stays the same, that we're looking at this 50% retracement that also lines up almost with previous structure through here. So again, just keeping things as simple as possible. Sure, no problem. Yeah, moving soon, but not yet, unfortunately. Roshan, we've also covered dollar yen. We spoke about that not too long ago. So dollar yen, just to quickly recap, I am looking to continue shorts below 150. So that's this orange line here. Temporarily, I am bullish because we are seeing the risk off sentiment slightly shift. So that would reduce flows into the yen and increase flows back into the dollar. Whether that's going to last or not, I don't think so. I am still bearish on the dollar for the rest of the year. I'm bullish on the yen for the next 12 to 18 months. So I think we are going to see dollar yen continue to fall eventually. But again, it's more just a matter of timing at this point. Did you do research on oil? Reports suggest OPEC will be hiking in May and June, as well as potential peace talks in Ukraine were underway. I see a lot of downside in oil. I don't actually, Royal. I don't really, Royal, not oil. I don't look into oil too much, only unless there is something that's caught my eye previously. But yeah, I'm not in the loop on oil at the moment. But I will look because that's piqued my interest. Might be able to get something going. Thoughts on gold? I'm not sure if we spoke about gold or not. I don't think we did. We did speak about gold. Yeah, so I was saying I might take a long here on Monday. If we can hold above this level and open the market on Monday, on Sunday night above, at this level or above, I think this would be a great opportunity to get into a first long position. I took a long, where did I go long? I can't remember. I did take a long, got stopped out, unfortunately. I think it was around this point here. However, if we don't see this level hold and we see further downside, this would be the next level. So this would meet previous highs. It would be quite a sensible structure along with this 200 moving average. So that's the two game plans on gold. Whether we get those situations or not, we will see. But I think gold longs are still fine. But what we've got to consider, or what we've got to think about, is because we're having a shift from pretty strong risk off now to more cautious optimism to risk on, are we going to see gold start seeing a profit-taking dip? It's definitely possible, which is why I'm not too interested in doing it today, or placing a trade on gold today. So I think Monday, Tuesday would probably be ideal at this point. Thanks, Ames. US30 has inverse relationship with DXY. Are they moving together in the same direction? They're not, Roshan, they don't have a negative correlation or a positive correlation. It's not really that simple. They run off things differently. So for example, with a great example of that is a rate cut. So let's say the markets are expecting a rate cut. What does that mean? It means dollar down. So dollar is down, but then what happens to the Dow? Well, that will go up because it's cheaper to borrow money. So they work up on, they go opposite ways based on the same news, but that isn't the same thing for every situation. So if we don't have a situation where the stock market's benefiting, the dollar's not benefiting, then it is likely we're going to see them do similar things. I know that was quite a short, maybe a bit nutshell answer, if you will. We've got about 5 minutes left, so doesn't always correlate. Yes, gold pushing open, yes, down. Yeah, the stock market's not doing too hot today by the looks of it. Oh, actually, seems to be popping up a little bit here. Yeah, actually, not too bad. Is there any final questions? We can have a look over the Edge Finder or some markets. If there's anything specific you want to cover. I'm not sure if COT's been updated yet. Not quite. Retail sentiment, that's always interesting. So minor and major currencies. Very long dollar Swiss. Long Aussie yen. Very short Euro AUD. Interesting. So they are majority short on a lot of the major pairs. Interesting. Okay. COT updating tonight. Yep. What are my thoughts on pound yen? Similar thing. I think we are going to have some upside on these yen pairs now. Yeah, as we are seeing here. So again, as we are seeing risk sentiment start to shift from risk off to risk on, we're going to see outflows from safe havens like gold, yen, and Swiss. So it wouldn't be a shock to me whatsoever if pound yen can start coming back up into this resistance zone between sort of 195 and 192.5. So yeah, I'm not sure I'd be looking to go short at this point. I think I would be prioritizing short-term longs, maybe just scalping day trading longs, shorting yen, going long on risk assets, and then maybe reconsider that once we have clarity on tariffs and we've got some more news. What's your opinion on nat gas? A bit of a bear market, Sean. I'm sorry, I've got no idea about nat gas. It's one of those markets. I think I've maybe had 2 trades on nat gas in my entire career. Nothing I do on those types of markets. Keep it simple. I used to say it was G10 markets, but it's not really. It's pretty much just G7 currencies I trade these days, and a little bit of gold and silver. CAD yen daily chart, clean trend line. Yeah, it's a really nice downtrend. This is a nice trend line, actually. You are right. It's quite satisfying. I think based on a daily chart, shorts are also fine, but we could expect price to come slightly higher. I'm not sure how much I would trust this trend line right now. Monthly's bullish. Daily's bearish. Weekly is still bullish. H4 is bearish. Okay. Yeah, I guess it would be a similar idea. I would look to continue longs until we see otherwise. Any trade ideas for next week? Not sure, OT. I normally do, well, I do all my week ahead planning on the weekend. So I'll normally stop working or stop trading on Friday, sort of late afternoon, and then I'll go and relax. Saturday, I'll start doing all my reports and finding out information. Then on Sunday, I go to the charts and start planning. Yeah, we do cover nat gas, but it's not my job to do that. That's we've got another trader that does all of those. I like to call them exotic commodities, but I guess it's more like agricultural commodities and things like corn and live cattle and all sorts of crazy stuff. Have you had a look at USD CAD? No, I've not yet. Interesting. So let me just check oil, see what oil's doing. So oil's strengthening. This is another thing. I don't have any real bias on oil right now, so it makes it very hard for me to come up with an idea for the Canadian dollar. So I'm just thinking, because this weekly looks quite good for a long position here. In fact, it looks very good for a long position. We've got a really, really nice level of resistance here. Or, sorry, current support. This is the weekly time frame. So this is like a very textbook break, retest, and potential continuation with this bullish trend. And the oversold RSI is like book perfect, actually. I'm not sure how I didn't notice this another day or sooner. There's no fib there, unfortunately. But back to the point, I think looking for longs as well, this is a similar idea, just trying to benefit from any pullback we can have on the dollar from this point here before we can continue lower. The problem is, or not the problem, but the thing is, obviously it's Friday now. I wouldn't be looking to open any more positions at this point. I would let the weekend go, and I would always try to close positions before the weekend, especially with the volatility we're seeing at the minute with Trump. Could say anything. Anyone could say anything, actually, in the markets, or have high potential of gapping open. So yeah, it's a risky time to trade, or at least a risky time to hold trades over weekends. Nasdaq potential bull for today. Yeah, I think if Nasdaq could break and clear, break and hold above these this level of resistance or level of structure, I think that would be a great opportunity to start looking for long positions off here. I'm just a little bit cautious that we're going to have something like this where we come up and then just drop again. I'm not sure how likely that is. I don't think that would happen or will happen. It's just, I don't know. I've got a really bad feeling about the markets right now. Not bad as in I think they're going to crash, just bad as in I don't have much confidence in holding anything for too long right now. So I'm actually really happy to just have some quick in and out trades and then leave. So many potential setups, but they're all just too far away. Tiger, that's exactly the problem I've got. There's quite a few things I'd actually be interested in, but you just cannot get into them. Euro Swiss has been on my radar as well. I've been considering taking a long position on Euro Swiss. We've got, I think it's HSBC that's in a long position as well. So if we can have a pullback on Euro Swiss somewhere, I'm not too sure where yet, I'd be quite happy to take a long here into these previous highs and see if we could just get maybe a 1 to 2, 1 to 3 into there. Again, that would also be benefiting from the shift from risk off to risk on. Although the euro is losing strength, actually, so I'm not sure. Really, actually, that's a great idea. Yeah, I agree, Tiger. It's one of those things, though. But it's the weekend. Go and relax. Oh, almost the weekend. Go and relax. Okay, so yeah, there's not much else. I think gold is definitely at a level of potential, I guess we could say. But again, that would be a trade for probably Monday. I just don't want to get into that trade right now. US stock market isn't attractive right now. Yeah, I don't know. Not for short term. I've invested quite heavily into an investment account into the US stock market. But yeah, short term or like active trading, I think it's intimidating, I think is the right word. It's one of those things where, again, you could have a really, really strong trade idea, and then, Saturday night or Sunday, Trump tweets something and the markets gap open and we drop another 5-10%. So yeah, it's fun times. But if you can't trade around it, then get off the desk, as they say, or something like that. Sweet. Okay. My time is up. So Chris Pulver is going to take over the show after me. So don't leave when I leave. I appreciate you all being here with me. You've been great to chat to. I hope you all enjoy your weekends. Stay safe, and we'll speak soon.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Friday. Welcome back. To have some pruning to do today. Google earnings were up. We have beat on revenue, beat on EPS. We're up a decent gap. Close from yesterday around 159 up to about 164 and change today. I do have some trades on Google. I just wanted to review those. I might be taking some profit on them. That one's out a little bit farther. I'm going to let that one marinate a little bit longer. Naked put is up about 74.4%. So if I can close this thing down, choices are I could let it ride over the weekend, close it out on Monday. I have a ratio spread out into May. This is about 88%. This one I'm probably going to take majority of the profit. So I'm looking to close out some of these trades now. That was 225. So you want to close this down for a small debit. So 20, let's see if I can get out of here for 25 cents. Probably won't let me get out that at a better fill. 25 to 27 is the mid. 28. Son of a bee. I got filled on this trade for 225. That'd be just under 200 bucks profit, 29 cents. Come on. All right, filled at 29 cents. So that's a ratio spread. 225. Closed it for 29. Not bad. And the other one is the naked put out to June. This one's up about 75%. I think over the weekend, as long as Google kind of stays where it is right now, over the weekend, there'll be some more time decay. But it's close. I like the 80 to 90%. If I'm doing a naked put, I like kind of the 80 to 90% premium. I closed out Qs and SPY puts this week for 80%. So we're close. I also think I don't need to be greedy, so I think I'm just going to go ahead and take the profit. It also gives me back some buying power. I'll raise some more cash. I think that's not a bad place to do it. So let me go ahead and just close this one down. That fill was a 254. Is that the one? Hang on. 130. Let me check the option chain here. 130 out to June. That would have to be yeah, I'm just gonna let that one sit. That's far enough out of the money at a 6 delta. The odds of Google dropping that hard I would say, are pretty slim. So I'm gonna let the naked put go a little bit higher in profit. So try to get to like 85 to 90% profit on that one. But I'll close out the ratio spread. So this one, the 105 by 100 is a ratio spread, and the 130 is a naked put. So we're gonna let those marinate a little bit. Let's get these organized. The 105 by 100, that's the ratio. 135 by 130, that's a ratio. Actually, batch those together. And this one's a naked put. This ratio spread I'm likely going to close. So the May one is up around 85, 86%. I'm going to close this one down. So the 225 closing for what? So you got it here for 30 cents. All right. 32. Still worth protecting. But I'm getting a little bit of a worse fill than I did the other one. 34 cents, 35 cents. Come on now. 35 cents got filled. All right. I think I have another one here. This is a bigger credit spread, wide bull put spread. Ratio spread. This is a wide BP. This one is okay. These are okay. Ratio spread. Have some partial shares. This one's got some action. So ratio spread here. And naked put. Ratio spread that I'm going to close. All right, so this ratio spread, going to take a majority of the profit. Hopefully 35 cents I can close it for. Fudge. We must be seeing a little bit of a drop right now. 36 cents isn't bad though. All right, so that one's closed. Keeping the naked put, keeping this 111 trade running. And this ratio spread's way out of the money, so yeah, this would be fine. Have some shares. Have some shares. No exposure, and ratio spread, and a wide spread here. All right, so sounds a profit, but I'm going to close that ratio spread. 225, closed it for 29 to 35 cents. I'll take that win. All right, let's talk currencies. Let's talk shop. Let's go top down. So I spent a lot of time yesterday in the afternoon just going through and reviewing like all the technicals in the market. So here's what I think. Right now we are hitting past support becoming resistance. Now we're going to see how firm this resistance actually is, because if today's candle, this is going to be a key level. If today's candle, number one, doesn't close above 5,500. So if we're not greater than 5,500, okay, above 5,500 would actually be seen as a pretty good relief rally, because getting above that means there's open space to get to 5,700. So greater than 55 is going to be critical for the bulls to kind of maintain this little melt up. If today's price is going to be a rejection candle, and if today's candle ends up pushing down lower, I think that is a dark cloud. I think that is a potential candlestick pattern that pushes us back into the gap that we saw this week. So Friday, Thursday, Wednesday, Tuesday to Wednesday, a big gap to the upside. Obviously, Wednesday's price action faded for the day, but Thursday was a nice little rip. But that 5,500 zone right here, you can see that is past support to become resistance. We're also on the trend line of the S&P. I know the NASDAQ broke the trend line. We can go to that chart in a second, but this is a really critical spot. So a couple ways that I looked at this measuring, if we have a low to high swing, okay, follow my lines here. This is like pretty clean technical stuff, but follow the line. You got a swing, you got a pullback, you got a projected symmetry right around 5,700. Okay. Now, that would be a spot where if we can get above 5,500, the bulls can drift and melt up into that symmetry spot. This may end up giving us a harmonic pattern that looks like that. The harmonic pattern is a sell sign if the bears confirm with, a toppy price action around 5,700. So that is one spot that I'm looking for the market to turn to the south. Okay, now that might be just a temporary turn in order to set up a higher low to still look at a buy opportunity to get back up to all-time highs, right? How can we get to all-time highs? Well, earnings are still coming in decent. Mag 7 next week. We've got Apple, Amazon, Meta, Microsoft. If those are all solid earnings reports, again, those are huge large cap companies that can keep this, this earnings season alive and see where everything else comes in consensus wise. So there's room to get up there. I think there's a big resistance level at 5,700. The flip side of that is, let's say that this is a cup and handle pattern. So instead of a low, high, lower, low, high, higher, low to higher high, instead of a symmetry swing like that, which I think is very valid, if instead this is a cup and handle, which we have this big dump to the downside, and then you see this cup and handle pattern. Well, if this cup and handle pattern breaks the high, if it breaks this neckline, you trade that like a head and shoulders measurement, and that head and shoulders measurement puts me up to this level. So you can see that I've got written down on my lines here, April 7 low swing symmetry and April 7 low cup and handle symmetry. So this would be my measured move. So area 1 for resistance is around 5,700 if we can get above 5,500. Otherwise, this runs, if we clear 5,700, it looks like there's no bears in sight, then this has a measured move to get back to all-time highs. And I really mean this. If we get back to all-time highs in the next like 30 to 60 days, I truly think this might go down as one of the dumbest self-inflicted wounds that the market has seen ever. I was baffled going back to one of my workspaces here. Let me find it. Is it this one? I'm just going to do a blank workspace here. I did this yesterday. I was shocked to see how wild and crazy this month has been. Look at this candle. Okay, look at this candle. This has the same type of price action since COVID. Like, this candle is over 800 points from the low to the high. We've had an 831 point move in April. Okay, over COVID we had a 900 point move. 920 points. So the price action and volatility rivals what we saw during COVID. Am I going to say that this ends the same way? Of course not. We still have a trend line that is valid right now. Like the bulls are still showing, like, technically the longer term trend is still intact. But if anyone is following price action, typically when we see this long wick like this, the market might have a tendency to try to retest it. Okay, so I wouldn't be terribly surprised if this low is going to be, pulling back right into the middle, and then the market may come back down to retest it. It might fail to take it out, but it might get a retest off those lows to see if the bottom is really gonna hold. If we test it again and fail it again, well, that'd be the bear trap scenario right on the verge of the trend line break, but the market still, maintains like bullish posture. So I don't know, but I will say this: moving forward the next 12 to 24 months, if and when this trend line breaks, this is not exciting. This would be a legitimate bear market if we break this trend line. So if we're lucky, this market, hangs in there, maybe gets to all-time highs. But this to me looks like another potential bubble. We had a bubble here that broke. We had a bubble here that broke. We had a bubble here that broke. So if we have another run up, I mean, do we get the 68 to 77,000 and then we break again? Sure, maybe. Not sure. But you got to keep a big picture outlook, because right now, yes, the bull market's still intact. But the scary part is going back to 08, 09, going back to this low. That's where things can get a little dicey. Would be like an outer trend line there. This is lows back in 2015, 2016 when the market was sideways for 2 years. There's a breach of that level from the COVID level, the COVID lows, right? So somewhere in here, it's like this would not be a fun spot to see the market, break this low. This is why I've said now for the last couple months, well, I guess the last month since we hit that low in April 7, if we're below 4,800, nothing good happens below that level, because that means it is another clear space down to about 3,500, and that would suck. So I'm not saying that's what's going to happen, but just be mindful. Like if we are going to breach 4,800 with some momentum, there's not a lot of support that sits there and holds it. Okay. But I just thought, man, it was crazy to see how much volatility this month has given us. We wrap up the month next week on Wednesday, I believe. And then we also have some non-farm. We have the Fed the week after. So next week is pretty crazy. We have, what's this? I mean, are they doing anything? China and the U.S. are not having any tariff negotiations. U.S. should stop creating confusion. There you go. Claimed that called him. But I mean, are we just getting a president that's lying to us, saying that China's calling when they haven't done anything? China's reported mulling suspending the 125 tariffs. Publication cited similar medical equipment, Asian superpower. Latest decision per the report. All right. I swear, like you click on these headlines and it's like, what a disappointing. And are these even written by people? I wonder how many articles are written by ChatGPT or something AI. Journalistic integrity. All right, anyway, let's go back to the charts. So does that make sense? Key levels, support right here that could hold us today's resistance. If this is a price that next week can get above 5,500, or obviously today could drift above 5,500, that would be encouraging to maybe get up into this 5,700 zone. If we reject off of this level and we fall back down, then there's a gap fill here. There's still intermediate support. There's still the lows, and we're still going to be stuck in this bit of noise. But a little bit more encouraging price action would be a little bit more time on the right-hand side of the trend line shows some promise. Okay. I just don't want to see the right side of the trend line be like, well, it's on the right-hand side of the trend line, but it's going to come back and revisit the lows before the market gets bullish again. So we'll see. Either we break above here with some melt ups, or we see price action that's respecting the trend line. So that makes the NASDAQ a little bit more slippery, because the NASDAQ or the Qs, there's my trend line break, right? But if we can't hold, I mean, this is past support right there. So this past support become resistance. If that doesn't break higher, then we still have a gap to fill. We still have intermediate resist or support, and we still have the lows. So if this one is a bit of an evening star that pushes back down, I mean, the bulls have to keep going. The bulls have to keep going, get this thing back into maybe 480, 485. That puts the NASDAQ, I mean, similar outlook on NASDAQ. So we've broken the trend line. Okay. But watching the S&P, it's like, it's not quite clear that both indexes are looking pretty good. So this one still has a lot more. If we measure the move, and I'll do the same thing. So let's measure this out. Take your low to high. Okay. And then you have your swing right there. So that would be your swing symmetry. And if we break this kind of cup and handle neckline, that becomes your cup and handle symmetry right there. So those would be the two resistance zones. If we are going to keep drifting higher, this is resistance zone 1 and 2. Now, the nice thing is if we see price action that stays bullish, I mean, you've got some directional targets that are still pretty nice. Obviously you can go after all-time highs and celebrate all-time highs again, but maybe we don't quite get there, So, but I think this gap fill to the downside is very doable if we have this resistance holding and this market comes back to fill this gap. Okay. we have that gap. We also have some gaps on the upside. So here's SPX. Let me go back to, let me move this workspace out of the way. This SPX trade, this gap to the upside could still get filled. So big gap here. And I believe is that your Liberation Day gap? That is the second. So that is, yeah. So this was this is the Liberation Day gap. So second, the day closed. By the third, the market was down. So that Liberation Day gap, if it closes, okay, markets still melt up. Let's go NDX. See if we have a similar look on that. So this gap to 19,589, that would be the Liberation Day gap. So when we ate into this, I mean, the NASDAQ had such a big rip on April 9th that we did chew into that gap a little bit, but we could fill that gap up here. But we still have this to the downside. We still have this to the downside. So there's Gap-a-palooza, and I don't know what price is going to give us. Bulls have been climbing stairs all week. That's been fine. If we get up to that level and fill the gap, does that become a resistance level? Maybe. So I am as cautious as I've ever been. I'm encouraged to the upside, but I'm cautious to the upside. So just trying to get some measurements here. I mean, obviously, if we fall back down to fill a gap here, or fall back down to this intermediate low or the lows, I'm still looking at like, okay, well, where am I going to get more bullish? Well, obviously at the lows. I'll get way more bullish at the lows. I'm hoping this market has had enough of a pause in the narrative that we're not getting like just smashed with bad news right now and negative sentiment, that things might change. In fact, I do wonder what did AAII print this week? Good Lord, we still printed a negative reading over 50%. Wow. So that's 9 weeks in a row. I think that's 9 weeks in a row. What? Let's go to sentiment. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. Never in history has this AAII sentiment survey, lost my charts. There we go. Never have we had 9 weeks in a row greater than 50%. So extremely bad sentiment. And this is the definition of climbing the wall of worry, right? Everyone is so concerned, but the market doesn't go down. So just the crazy ebbs and flows that the market's dealing with. Here we are with this melt up. I don't think that this is a time to like load up bullish. I think this is the time to still pick your battles. I will be looking to prune the portfolio and take some profits along the way. A lot of those profits might be taken off either today or next week as we come into the end of the month. I've got a lot of May expirations that I want to make sure that if I'm in profit, I want to protect them. So going into May, I mean, watching like AXP, for example, I need price to stay above 260. Right now, I'm showing some small profit on my ratio spreads, potentially have a, $1.82, $1.86, $1.89, but I also have a $10 profit trap with a ratio spread. So my break even would be, 240 something. I'm not saying that I want to take shares of American Express, but if I get a 260 assignment minus 10 minus $1.82, I own the shares at 248. The lows that we saw on AXP, the lows were 220, 221. So it's not like perfect. It's not foolproof, but I hope that we can kind of chop around in here for a little bit, even for the next week, and just give me something that looks somewhat good resemblance and profit. So, all right, let's continue to go top down here. But is everyone good on the measurements? SPX. So measurements, got them in blue. NDX, I measured my symmetry swing and the cup and handle projection in case we are going to continue to go higher. This is a key level for today and a key level for trading into next week. If we can get above this level, there's still melt up potential, and that's fine. Melt up potential is fine, but is it melt up potential that we're looking at a bullish pattern, and then that bullish pattern sets up a right shoulder, and we break the neckline and we continue to go higher? There's a whole nother layer of measurement we can have there, but I'm still quite cautious just in case the bears are like, all right, thanks for this little rally. We're now going to claw this thing back down. Okay, Dow's a little bit different. Dow has not closed above the April 9th highs. So I think I still have some puts on the Dow. So DIA right here. So I've got bull put spreads to June naked put out to 360. I'm surprised that the 360 puts haven't shown me any profit yet. We're trading at almost 400 bucks. Let me check the 360 to June 30th. June 30th, 360 is, I mean, it's a freaking 15 delta, man. That's so far out of the money. Bull put spread, bull put spread, bull put spread, naked put 360, 111, 365. It's like those are low enough deltas that should be profitable. I don't know. Maybe just the IV is still high. The implied volatility is a little bit sticky still, but hopefully I get over that like time premium hump where it starts to accelerate to my profit side. Russell trading at 192. I have some calls on the Russell at 200. I was just looking to kind of repair it. I've got 400 shares of the Russell out to June at $200. If it gets called away, that's fine. I'll make. I'm trying to think like about 1, 2, 3, 4, about $4,000 on the Russell, and then I've got some 1-1-1s and ratio spreads and puts on the Russell that were down below the lows. Okay, the VIX. It's nice to see the VIX retreating. Hopefully we are. I mean, I don't know if we're going to continue to settle back into the low 20s or maybe the teens. VIX term structure is still in. Oh yeah, we're still in backwardation. So this is not flipped to contango yet, which means there's still way more uncertainty in the near term than there is going out further. So usually you look at a term structure for the VIX and it looks like this, which means that further out is more uncertainty. You should get paid a higher premium for that. But now it's so much more so to be uncertain in the near term, which makes sense. I mean, the market is still crazy cautious. But that's VIX right now. The move index, this is your bond volatility. This is going down. Okay, TLT catching a bid today, which is kind of encouraging. US 10-year is down slightly to it's down like 0.04 today. I mean, I'd like to see this. I just talked to a couple service providers yesterday for a mortgage, and you know we're watching this closely. I'm watching this closely. I'm sitting about 35 days out from closing. I can look at a lock at 30 days, and I can look at a lock at 15 days. If this can come back down towards these Liberation Day lows, I'm likely going to do a lock on my 30-year mortgage, and it's going to suck. It's still going to be like probably a 6.5. If it comes down a little bit, maybe I get in the 6.25 area, which would be fine. Numbers are still fine. It's just annoying to have a house that I just sold at 2.7% interest rates, and now we've got a 6.5. Yuck. But that's the name of the markets right now. It's not normal. So, but interest rates, I don't think are going to be crazy bearish. I asked this question this morning in a live session. How many of you think that that rates are going to come down? Okay, if given the choice, is it rates come down or house prices come down? One of these two things are these two things working together, or one of the two are the only way that the housing market is going to get more expensive or more affordable. So which one happens? Do rates come down or do house prices come down? Type in your answer. What do you think? So either 1 for rates coming down or 2 for house prices coming down. I'm just getting a consensus. What do we think? Do you think rates come down? Or do you think house prices come down? And the reason I'm asking is because I have an interesting chart that shows something pretty concerning. This is from 2000 to present. Home equity prices have actually outperformed the stock market since the great financial crisis, which was a housing bubble. Okay. So I don't think that rates are coming down. I think that home equity prices are going to have to come down, which means everyone that refi during COVID, everyone that's sitting on a home that they bought for $200,000, $300,000, $400,000 that's now worth double or triple, that's not real estate. That's funny money that you think your house is worth that much, but in reality, supply is going to catch up, and it's going to put so many more houses on the market that people will be lowering prices to sell their homes that are currently at these crazy high valuations. Okay, the typical It usually, I think over the last 30, 40 years, it was like 3 times salary was what it takes to own a home. Now it's like 5 to 6 times salary to own a home. Instead of doing 20 to 30% gross revenue on your mortgage, now it's 40 to 50% gross revenue on your mortgage. People are house poor. Rates are higher. Prices are crazy expensive. House prices, home equity is outperforming the stock market. That's insane. So I don't think yields necessarily come down, right? Because if yields come down, that means that bonds have to rip. Bonds go up, then yields can come down. But global bonds are up. Global bonds are up. So that's why we're getting some stickiness in that the 10-year. So anyway, I'm just my forecast is that home equity prices are way too high, and we're probably looking at like a 20 to 30% correction, and supply is going to continue to catch up, and this gap will close. And I don't think rates are really going to improve that much. I would be shocked to see, unless we go into like another full-on crisis where the Fed cuts so aggressively that nobody's buying, it's just a full-on contraction. Then maybe we see low interest rates again. But if the Fed is just going to cut by 50 to 100 basis points, I don't know what that reaction is going to be starting in June. I mean, this has never happened in 40 years. This has never happened in 40 years. So the Fed starts to cut again. Are we going to see this resume what's always been the trend, or is this going to be the opposite where that happens? Does the Fed have to act like we need to attract foreign debt by making yields more attractive again, by making them go higher? And this is why a lot of arguments are being made that like the Fed's not going to cut rates in 2025. So it's a big question mark. It's a big to be determined. But I think that house prices come down as supply continues to be built and caught up. Rates will probably stay sticky. If we're lucky, we're going to see rates stay in here and not necessarily go up. Okay, so anyway, just thoughts on the housing market. Let's go dollar, oil, gold, silver. Dollar watching for a near-term low. I'm not looking to scoop up, the dollar. I'd like to still see the dollar maybe fail at a higher low. This is a 1 hour time frame. You can go between like the 1 and the 4 hour chart. Okay, 4 hour chart still has a lot of room to get back to the 200 moving average. So a couple ways I could see this one. So the 1 hour chart is, I don't want to get any false signals on the 1 hour chart. So if it breaks higher, okay, fine. I don't know if I'm going to buy that, but what I would say was this, as on the 4 hour time frame. Okay, the 4 hour time frame has a decent pullback towards the 200 moving average. So if we see this, let's say the dollar index continues to go up towards this 200 moving average. Well, that's a good spot to look for a sell trade on the dollar, and then this trend line for a sell trade on the dollar. I still like that area to say, okay, dollar weakness, but let the market pull back to find those levels, right? The other side of this, if you're looking for a buy opportunity on the dollar, is I'm not buying it now. What I'd like to see is if this can come back down into the lows, looking for some divergence or looking at some equal lows, then I would say that's a good opportunity to scale in small on the dollar, but still have plenty of upside with a better entry. Trade it back to a 200 moving average on the 4 hour time frame. That'd be target 1, or trade it back to this outer trend line, target 2. Obviously, the more conservative is just take profit when you get a pullback. But that would be a better entry to get filled near the lows. Make sense? So I still think the dollar is due for a bit of a pullback. If it continues to drift higher, that's fine. Watching for resistance in here or resistance in here to then resume selling. But ideally, because this does look like a pretty decent bottom, I think if we came down to retest the low, or we actually hit my symmetry move somewhere in here between 98 and about 96.50, I'll put 96.50 here. I think a low can form on the dollar. And we form a low there, you can draw an aggressive trend line, still get a move back into this 200 moving average. And, point wise, that could be anywhere between 200 to 300 points on the dollar index. Not too bad. Okay. Oil, let's go back to the daily time frame. No trade on oil right now. I mean, we're not above the floor. We're not back below the lows from April 9th. It's actually April 7th lows, right? No, that was the low in the 9th. We had a spike down. So I had said if we come back down to the lows again, I might look at a debit spread to buy some oil. But I'm going to stay out of it for right now. I'm sure that, like I keep saying this, but like iron condors and strangles and sell sides where it's a directionally neutral strategy, those could work out pretty well right now since oil's choppy. I just don't trust the volatility in oil that we could have like a spike up, spike down, and I don't want to be subject to that. So Staying out of oil for right now. But if we revisit the lows, I'm watching on, I'll probably get a futures trade going. UNG, honestly, my entire UNG narrative is now like, well, we're back below the 200 moving average. I'm out to 2027, so there's still some time on this trade, but I guess I'm just gonna sell some more premium. So this is a UNG trade. I'm just gonna sell another side against the. I mean, my break even's like $16. I mean, I could be more aggressive, just sell, which actually might not hurt me too badly. If I can bring this debit down from 11.25 down to $10.50, $10, $9. I mean, my break even goes into the teens. I mean, the low here is around $14. So if I can get my break even around $14, I don't think we're necessarily going too much lower than this on UNG. But I also want to make sure that whatever I'm selling is going to still yield me some profit. Okay, gold, 32.76. We are, corrected off the highs a little bit. I've said this week, I mean, I see at a minimum, I want to see it pull back to the 21 or the 50 moving averages. I still think this bar count is excessively high. It's not as high as it was back during 2009, 2011, when we stretched over 600 bars, but this is still nearing 400 bars, and that's a high bar count, especially with a 20+% move above the 200 moving average. So I still want to see a dip on gold to buy in this area, okay? And then if it pulls back further, a buy in this area. And then long term, look, if we buy in this area as like, chunk number 1 and it gets back to highs, profit potential. Chunk number 2 gets back to highs, profit potential. Cool, fine. Even if gold consolidates, but you can buy a low, and it comes back up to the highs at resistance, there's still profit potential. Okay. So this is why I'm not buying the highs at 3,500. I didn't buy the highs. I've been waiting patiently. I know this market has been like super bullish, but we just had a turn, and this pivot is kind of nice to see. I want to see it at least pull back into the 50 to 200 or the 50 to 100 moving average. Well, I take that back. 21 to 50 moving averages right here. Silver. Pull back today. I'd still like to see silver break these recent trendline highs. Bitcoin, nice little run on Bitcoin today. MicroStrategy is also making a run. This is looking better for an income trade for me on MicroStrategy. I've got this one rolled out to June. Need to stay above 310. I'm going to set a chart alarm now at 310. And we're trading at 365. Let me put a chart alarm up. I think at a 375. So right now my MicroStrategy is up around $150. And this one has potential to pay me like $1,150. This is a potentially 320% return on the risk. So I paid a $350 debit for a $15 max profit. So that's $1,150 net. And I need a 375 by 390. Now there's plenty of time in the trade. So even if we get back up to, 375 is resistance. Let's see. 375 resistance. And if we're above that, great. I mean, I don't know if this is going to be a range trade on MicroStrategy or if Bitcoin, I mean, Bitcoin does look postured to do something pretty special right now, like possibly hitting all-time highs. So let's go back to BTC here. I mean, I'm looking for a pullback. Maybe we get one, maybe we don't. I would assume we're going to. And here's what I would say. Let's just say hypothetically that Bitcoin continues to run. Okay. Now, I would look at how it runs, and I would look at the potential inefficiency that this market could come back and still find. So we might have resistance here on Bitcoin that falls back down into support. So we might have a range trade, and although everyone could get super excited that we're back up to all-time highs, is it going to go higher? I don't know. Because we had months and months and months of consolidation back here. So this consolidation that finally broke out, we could have more consolidation here. So I mean, again, income opportunities, if you're trading from low to high, it's good income opportunity. Obviously, if it breaks and goes higher, that's exciting. It's just going to continue to kind of cement this legacy that Bitcoin is what it's supposed to be. It is what the maximalists say that it is. Michael Saylor is going to look pretty smart. But watching price action. If we get a pullback in Bitcoin, great. I want to see some pullbacks. I did take some profit this week on some spreads. So I do have some IBIT exposure. I added some puts this week. So IBIT, I've got a bunch of shares. I'm up $42,000, and hopefully there's plenty more to go. I've got some bull put spreads out to May. These are up about 43% of max credit. We're trading at 54, 57. Let me check the strikes here. So 52 by 51. It's still trading about a 30 delta. So do I want to take assignment there? Not really. Would I take the partial profit? Maybe. So let me I'm just going to put a note here. I might just take some profit on IBIT today because I put in a bunch of puts that are like in the 30s. So I don't necessarily want to get an assignment if price were to dip back below $52. I don't want to buy more shares there. I'd rather buy them lower. So I put in some puts in the lower levels, like the 40s and 30s. So anyway, I might just take some profit on this is my naked put combo here. So 31, 30, 29, 28, all naked puts, $471 of income. And it's just going to take some time. This is a, January expiration, but these bull put spreads, probably looking to take some profit here. 52 by 51. How is this not up more profit? Oh, it's the May 16th one. Okay. So anything in the May expiration, this is up about 40%. Sit over the weekend. Maybe it helps if Bitcoin closes at a high. Yeah, I'll keep an eye on these May 16th expirations. So, all right. But Bitcoin's looking pretty good. So if we don't have a pullback, then I think there's resistance at the all-time highs. But I'll just kind of look, if we get all the way up here, I'm not going to take a fib. That's not the play. The play would be I'll delete the fib. And if this resistance holds, then we're likely coming back down to find some pockets, right? And we're going to come back down and find some support. And this is nothing more than resistance and support. And traders can survive and make a lot of money until eventually this becomes a breakout. And maybe that's the exciting stage over the next 12 to 24 months is if this is consolidation, this just builds and builds and builds, but eventually looks good for a posture breakout to the upside. Hopefully that's something we can measure and take advantage of a nice bull market again. Okay. How would you evaluate to sell or hold at that high? I don't know. I mean, if I'm in here for any short-term trades, then I'm taking income. But longer term, my investments in the longer term for Bitcoin, it's longer term. I'm not going to touch it. I'm not going to close it out. Look, this is not the high. I mean, if we're really having this conversation on Bitcoin, is Bitcoin spot price going to be 250K, $500,000, $1 million? I mean, you're talking about something that has outperformed with more inflows than gold. It took 8 years for gold to get the inflows that it did for its ETF. It took less than a year for Bitcoin to outpace that. So, I'm just saying, like the exciting part is the potential alpha that Bitcoin offers with a small exposure. I mean, what's crazy is 1% in Bitcoin over the last decade has helped double the S&P performance. So the S&P performs about 8% a year. If you have 1% exposure to Bitcoin, you're now averaging about 16% a year because of that 1% exposure. That is wild to think about. Now, obviously, that is changing because we're not nearly as wild and volatile, and the beta is much lower now. So I think that rather than like a 2 to 3 beta, you're probably looking at like a 1.4, maybe a 1.5 beta. So it just means there's more. I mean, like having a 30% correction here, that's a lot different than what we thought. I mean, hell, we had a 27% correction in the Nasdaq, and Bitcoin is only down about 30+%. So I was pretty sure that if we have a 20+% correction in the markets, we're going to see 30, 40, 50, 60% Bitcoin. Didn't happen. So anyway, I mean, the evaluated is like if you're income trading, then take your profit. If you're long-term trading, you're just going to build and accumulate. I would look to build and accumulate. If we come back down to the lows, I will add. Obviously, there's risk in this trade in case it breaks down, but if we break and posture higher, those add-on trades to go up to all-time highs again with some momentum just means bigger gains ahead. So that's the plan. All right, watching. Copper got closed out today for profit. I closed out for $1,200. I would say that's a survival trade because this was a wild swing in copper. Fortunately, it was reflexive and came back up into all these pockets here. So what was a ridiculous 25% slump in like a 6 or 7 day stretch ended up paying me about $1,200 total. So I let it go all the way to expiration and took the profit. Japanese yen, big pullback in the Japanese yen. That's fine. clearly risk appetite is proving that the yen is getting a little bit weaker. It also is hopefully helping our Swiss pairs, my Swiss pairs. So Aussie Swiss looking a little bit better. Still watching to spot a bottoming pattern. CAD Swiss looking a little bit better as well. I need to put in a buy at these lows around 58.50. Euro Swiss climbing back nicely. Let me check on a couple of trades here. So, I mean, if the Euro Swiss can get all the way back to if the Euro Swiss can go back to this high around 96 and change, I'm probably taking some profit there. So let me just spot check on my platform. Let's go currencies. Aussie CAD. I'm looking for, if this is a low, I think the Aussie CAD, let's say this is a bullish swing, pull back to like a 50618 zone, and then look for a push back up into these highs. I still like Aussie CAD for a potential long. I like New Zealand CAD for a potential pullback in a long. Let me check on my levels here. There we go. And Euro Swiss. Yeah, I mean, if Euro Swiss gets back into the highs, let me do the math on this. That would be about 130. I mean, that'd be about 13 grand. If my Euro Swiss hits even this high, let me go Euro Swiss here. This is about $13,000 of profit right in here. So I'll be happy taking some of that profit. No problem. Dollar Swiss, kind of the same thing. Dollar Swiss looking a little bit better, just trying to pull back in some of these pockets. My dollar Swiss position, I want to see if it gets back into the pocket around 87.60 or 87.90. And that will help also grab a little bit of profit towards, I mean, it's about a $15,000 winner as well. So got some big swings coming. If price goes the way I want it to go on these Swiss crosses the next 30 to 60 days, this could be pretty encouraging. And if gold has the correction that I'm looking for that technical move, then gold could be, the reason that I make a lot of money in the Swiss pairs is the gold dips, gold corrects, and the Swiss weakens a little bit. Offer up some positive swap and some risk appetite, volatility goes down a little bit. That all could be good developments in the Forex market for at least some of the positions I have. So Aussie CAD, fine. Aussie Swiss, fine. Aussie Yen, I mentioned on the Yen crosses, if you're looking at these lows, looking for a bottoming pattern, we're kind of getting one right now. So if you're long Aussie Yen, it would make some sense. Aussie Yen has room to come back into, some structure here, but just be careful. Like stop loss, probably safe below the lows. If you trade what you see, just get into those smaller time frames and try to see if this one continues up. Aussie New Zealand, starting to scale back in. I haven't been filled on any additional levels. So I'm looking to add in a 106, a 103, and a 100, just above like 1.0050. But I'm going to dollar cost average into Aussie New Zealand. Aussie dollar, I'm out. If we get a pullback in this one, if we get a pullback here, maybe a higher low to a higher high swing. A lot of open space on the Aussie dollar if we start to get that trade. Next week in Canada's federal election. Okay. I mean, if that affects the CAD, cool. Hopefully it's good. So here's CAD Swiss. Hopefully we're heading back up into some decent levels here. CAD Yen. CAD Yen, I said this week was probably one of my favorite Yen pairs. And that's really me never saying that. But if we did hit lows, which we did, anybody long with a nice stop loss, I mean, CAD Yen has room to get back to this level, has room to get back to these moving averages. So I said this one offers up a pretty good reward to risk setup if you're long CAD Yen. Swiss Yen, I'd stay out of that one for now. Euro Aussie, this one might still do what I was expecting, which is a high, low, lower high to lower low. So if you get a chance to look at a swing trade on Euro Aussie, that would make some sense to me. Euro CAD, still pretty choppy, but I'd like to think that this area, with as quickly as it ran up, we're just going to chop around here and hopefully end up breaking the structure for a correction. Correction back into 5,400, maybe a correction back in these previous highs around 1.52. But, not forcing a bunch of trades, but still kind of willing to trade this resistance area and this potential topping zone. Euro Swiss, watching closely. Euro Pound, robot trading. Euro Yen, still moving pretty well. Didn't even come back down to revisit lows because the euro was so strong with the dollar getting weaker. Euro New Zealand, similar to Euro Aussie. If it pulls back, look for a swing trade, stop loss, swing back down, test the low, find some moving averages, recent resistance can become support again. So this one, I mean, this is a lot of volatility here. So I think traders on the higher time frames can watch to have good structure on the higher time frames with lower precision on, like, say, a 1 hour chart or even like a 15-minute chart. Euro dollar, I just drew a big fib here. I think the euro dollar pulls back, a 30, 38, 50. I mean, we could pull all the way back to a 618, 786 zone. Why? Because we had a lot of support back there before. So, I mean, honestly, I'd almost like to see the euro dollar do something like this. Give us something as far as a topping pattern, and then look to sell a break on the euro dollar to come back down into some retracement levels, and then see if this is okay. Get your profit running, move a stop loss to break even or better, right? Break even or better. And if this pulls back to a 382, 50, 618, just trail, and then you're looking for lows to form and see if this thing swings out. So it's just the inverse of the dollar index. Pound Aussie, maybe similar to the Euro Aussie, where we have straight down. It's a bear flag, but these currencies don't typically do flags. So a high, low, if it pulls back to a 50, 61%, there's a good swing opportunity there for symmetry. So previous highs, projected symmetry, moving averages out here. But I mean, it's probably 1,000+ pip swing if you're watching. Pound CAD, this one keep an eye on. I think Euro CAD's a better setup, but I think that structure is a little bit too tight. Maybe going back to the highs to look for some resistance to sell. I think selling high gives you a better reward to risk situation on the pound CAD. So I'm not ready to jump into that one yet. Pound Swiss, this one is moving along. These are the pockets that I'm going after. So if you're long pound Swiss, it's not too much further away. So having a run here, if it pulls back, a run here pulls back. I mean, anything in here takes some profit. So 112, 113, I would say that's good enough. It doesn't have to be perfect, but it can be good enough. Pound yen, say no trade on pound yen. Unless you're a scalper, there's good volatility on the pound yen, but you got to be a scalper, I think, to be consistent on that one. Pound New Zealand, similar to pound Aussie. We had a wild swing. If it pulls back, maybe another pushback down to the lows, or like a 5-0 pullback to a 127. That usually works out pretty well for this currency. Pound dollar, watching for some, profit protection, yes. If we were hitting resistance up here, maybe there's a chance to fail at the highs and sell this thing nice and high and get a little bit of a retracement. But I think euro dollar is a little bit cleaner than pound dollar, so I'd probably just stay there versus trying to force a trade in pound dollar. New Zealand CAD, I want to see a pullback. This to me is a good bullish pattern. We have a high. If we get a pullback here, I'd love a 50% pullback and then look for a swing up. So 5-0 to 127, something like that. 50% pullback, 127 extension. I like that trade a lot. So I'm gonna keep adding to New Zealand CAD, trying to get back to range highs. 86 to 8,800. Looking to go long and stay long. New Zealand Swiss, still watching. I'm in some profit on both Aussie Swiss, New Zealand Swiss. This one, if this is a bottoming formation where this is the low, if we come back up to here, then I'm looking for a pullback and at least a 3-wave move. I could hold this for a 5-wave move, but I'm probably not going to be too greedy. If I get a 3-wave move, this is going to be up a lot of profit. So that should work out pretty well. New Zealand yen, a little bit more crazy and volatile, but still similar to Aussie yen, CAD yen, like they're performing some pullback trades. New Zealand dollar, if you like New Zealand dollar, I'll pull back into here, pull back into a fib zone. Not a bad spot to look at a swing trade, risk below the lows and reward into open space. I think that's a very good looking setup. Dollar index related, I think that's putting more pressure on the dollar. Dollar CAD, really choppy around this zone. I don't like this. I think this is it's a decision zone, but it's tough to say which way we're going. We already did Euro New Zealand. Euro New Zealand, I'm looking for a pullback. I don't want to buy it. I'm looking for a pullback here to then look at a swing trade. That's my Euro New Zealand. So essentially we're putting in a top. That's what I'm thinking. So if we get a pullback and then a swing trade, great. If it continues to go lower, then I'm looking to buy it super low, because that would be a crazy move, overextended, and most likely coming, back up. But I think if we have a pullback first, there's a swing trade to balance out this entire rip from February to the highs in April. Dollar Swiss, watching to see if this is a bottoming formation that's going to be in the works. Looking to see if I get back to this level here. I will probably take some profit on Dollar Swiss, and that's it. I mean, if I watch and see how this forms a low, is it just going to continue to go up and then a pullback and then up again? Maybe up again, maybe a 5-wave move. But if we get back to this pocket, I'm going to close it. And then dollar yen. Is anybody long dollar yen? I mean, it came pretty much right back down to support. Looking for an aggressive turn. Smaller time frame is turning. Dollar is due for a turn. Yen is weakening pretty aggressively. This might just be a big range trade. We might be this high low is just not going to break. If this market pulls right back, where would be a big cluster? Well, all this past support resistance is a big spot for the dollar yen to kind of find the halfway point, right? We have resistance up here. We have support down here. Halfway point is where this market can figure out, how it's going to fight. So dollar yen, I think if you're on smaller time frames and staying with what you see, dollar yen could retrace a little bit. If risk appetite is in, meaning we don't go to some risk off mode again, then dollar yen can probably pull back to like 148, 149, maybe 150 round number. Okay. All right. That's going to do it. We did lots of currency pairs, lots of stocks. For the most part, stocks are doing okay. This is the wall of worry type situation. Car buyers a lifeline with latest decision. What is that? Oh man, that guy's made for media. Let's go to the heat map today. Interesting. So we have 61% of stocks declining, 34% advancing. Tesla is up today. Google up today on earnings. Meta up today. T-Mobile down. Nvidia up. It's actually a lot of red. 2/3 of the market down. I'm seeing a lot of chop in the S&P. I mean, the market's essentially gone nowhere this morning. So this was a perfect little window for my SPX trades. Those did pretty well today. I knocked out 2 for 2, which was pretty cool. The week was not easy though. This was not a good week. I actually ended up taking some net losses on this strategy. We were directionally down for the day here. I closed out for a tiny little winner right there. Had a winner. So this was a loss. This was a win. This was a win. This was a loss yesterday, and this is a win today. So all in all, that was let's see, 2 losses, 2 winners, 2 winners, 2 losses, 2 winners. So 1, 2, 3. So I had 6 winners and 4 losses. Took some butterflies yesterday, and I ended up having like 8 winners and 4 losses this week, but didn't make money. I was down about $350 this week. So that sucks, but usually performs really well. It was just one of those weeks where it didn't. So anywho, we got some key levels to watch. Next week's going to be interesting. Mag 7 earnings next week. Let's take a look at the calendar, and then I'll let you go. So next week, let's see here. Retail sales, we had sentiment revised up slightly. These are still terrible readings, by the way. I mean, if you go back in time, how much further back can you go? I mean, these are some of the worst readings we've seen. I think this was the second lowest print ever. This is during the bear market. These are some of the second lowest prints we've ever seen. And I don't know if that's because news is just more in your face and it's every single day we got to hear about it. But this is, 9 straight weeks on sentiment printing like higher than 50% bearish. That's just so extreme. But this market clearly has a way of climbing the wall of worry. Does it climb all the way back to all-time highs? I think that would be such a slap in the face to traders that have navigated like a high volatility environment. And like surviving, like obviously I'm happy that I'm up some profit. I'm back up around 4.5%, 5% right now, which is fine, but it's not like it wasn't easy, so I don't know. I mean, and maybe I think the question is like, is this the bottom is in, the correction is in, and now this is back up to all-time highs, or is this this is a melt up and this is a bull rally within a bear market context? I don't know. I think there's a lot of areas for this market to fight right in here. I know I have a ton of crap on my chart. I apologize for that, but this is where the market can get very indecisive because we are still below the 200 moving average. If you want to keep this really simple, the S&P is below the 200 moving average. That technically is still a sell zone. Even the NASDAQ breaking a trend line, okay, is still below the 200 moving average. So until this market is above this 200 moving average, this is a sell zone. And I know that, yes, I mean, the corrections we can buy and we can take some short-term trades and income. But the point is, I mean, it's still in a technical sell zone after a 50 cross of the 200. This would be that, bull rally within a bear market context. And we'll see if that's what ends up happening. I still think this low is pretty key. If we do have a rejection, we come back down. Is it for a higher low and the slingshots back up later? Does it come back down to retest the low again? And this is just going to be just a bunch of chop for the year until we get an explosion higher. I don't know. A lot of to be determines, and that sucks. It's not an easy way to trade, but it's just a reality of what we're dealing with. We got to survive it. So, all right. That being said, happy Friday. Have a good rest of the day. I'll let you go and come back and join us next week. All right. Thanks, everybody. See you.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.